Welcome to the Justin Johnston Show. This is episode 1. I'm Justin Johnston. I'm a commercial real estate broker. I've leased and sold commercial real estate for the past 27 years. And my partner and manager, producer, Blake Moore, he's helping make all of this come together so we can bring to you what we're doing every day and where we see this real estate market going. In this episode, we're going to discuss what some are saying the predictions of 2023. It's the end of 2022 now. What do we know or appears to be happening in the next year ahead? I think it's going to be an interesting year, and so we've got the 10 predictions there. The emerging markets as gateway cities that we really have identified, but the market has identified as well as where people are relocating to and relocating their businesses to. And then finally, in this episode, we'll discuss where we see the market going, our predictions from a personal standpoint, and how we see it unfolding in 2023. And before getting into that, where it's our first episode here, we have a culture, and I think it's who we are, what we're about, and what we see in all of the transactions and deals that we do is the 5 core business principles that we base everything off of. This actually was in combination with an article that we saw on LinkedIn. I tried to go back and see who was the author of it. So, but it was a well-written article. We've kind of modified it into what we are seeing. We've ended the year having our goals set up for 2023, trying to align that with our clients and where we see it going. Those 5 areas are honesty, responsibility, fairness, respect, and integrity. So the reason that's important, and you try to identify that, is because in nowadays business, you're trying to put together a core group of people. How do you build that camaraderie? How do you have your set of principles that everybody's living by? Call that culture within an organization. And you want to know that the people that are out there have got your back and that they've got the integrity of a level that reflects what you're doing. And we believe that that is for all the new agents that we're bringing on, trying to recruit. If you feel like that's a number one and high priority of what is important to you, as well as our clients, that is who we want to work with and who we want to have work for us in the years ahead. This is the top 10 predictions for 2023. We totally agree with it. It's things that maybe are very obvious to some people. Once you read it, it's like, oh yeah, this is what's going to happen. So yeah. We thought we would do this. Joseph J. Ori, Executive Managing Director at Paramount Capital Corp., was quoted in this article out of Globe Street last week. And in looking at this, overall, cap rates, sorry everybody, they're going to increase, especially in multifamily and industrial. That's across. It's going to have to, just where the cap rates are selling at right now, and we'll go through that. But that is a byproduct of the rising interest rates where things were trading at. So number 1 on the list, short-term interest rates are going to go up probably at least 1%. Federal Reserve, they keep raising the rates. We're sitting at about 3.8 today as the 10-year Treasury is trading at right now. That means we're going to be probably seeing close to 5%, 4.8 to 5% as the 10-year Treasury.
So with the 10-year Treasury being at 3.8, does that is what all the rates go off of, correct?
Yeah.
And is it usually, like, what makes the rate 4.8 to 5% if the Treasury is 3.8, just for the people who don't know?
So if it's at 3, well, we're predicting that it's going to go up at least 1 full percent. I think that's going to happen by about summertime, and then it'll cool down. So prime is 100 to 200 basis points above that. So if the 10-year Treasury is trading at what we believe it will be,
Yeah, 4.8.
at 4.8, let's just say that, not necessarily reach to 5, then prime lending rates are going to be 5.8 to 6.8, somewhere in that ballpark.
And so in your opinion, what do you think is going to make the rate go up by 1%? The 10-year Treasury.
I just think the Fed's going to
they're just going to
continue to do it. They are, of course, they did nothing for a long time when inflation was looking like that, and now they're going to make sure they stamp it out, maybe to a deeper recession potentially. I don't know if that's what will happen overall, other than that's his prediction is 1%. I think I agree with that by summer of 2023.
So you think it's just more correction from all the stuff that went on during COVID?
Yep.
Okay.
Yeah, I do think so.
Yeah.
And the additional money being dumped in. I mean, all the factors that led up to that inflation hike, I think we're going to be in that. And I think maybe it'll come back down a little bit, after that. But that's, of course, capitalization, which is item number 2. Cap rates will increase 1 to 2%. Now, the Fed increases short-term interest rates. Commercial real estate, it's going to have the average cap rate out there will go maybe up to a 7 cap, right? So I mean, if we're sitting at 5.8 to 6.8 prime lending rate, 7.
Yeah. So cap rate is essentially just what the average consumer could get their rate at, correct?
Yeah. The cap rate is what evaluation. So evaluation of quickly you can take the net operating income, capitalize that on a certain percentage. Well, the lower the percentage rate, the higher the value is going to be on that property that you could pay to get that return. Interest rates have gone up, and there's that spread.
Yeah.
It shouldn't be less than what the interest rates are.
Yeah.
It's hard. Now, I do predict, which is item number 3, the cap rates for multifamily and industrial. They're going to be very close to what I think prime rate's going to be. In fact, maybe even a little more aggressive. There might be a little bit of a negative spread on what the financing rate is. I think that because rates are, we're talking interest rates, lease rates, I think will continue to outpace a little bit for the demand that's there.
Yeah. So you think
so people are gonna buy it knowing that there's a little bit of a negative spread in the beginning. They're probably gonna have to come in with more cash, down payment, and then we'll see rates continue to come up, and that's what they're gonna base their evaluation on.
So you think that the leasing payments will be more than what the actual, essentially the mortgage payment would be, correct?
Yeah, and I think the lease rate is going to just increase some from where it's at right now. Where the market is, I think we've still got some more room to have in those sectors. I mean, not all markets, but I think across the country for the most part, they've just been trading at that cap rate. So I mean, cap rate's probably somewhere on multifamily. It's going to be somewhere between. Instead of 3 to 4% cap rate, it's going to be 5.5, 5 to 6%.
Yeah.
That's a significant jump.
Yeah.
That's going to take the value of those properties down.
Yeah.
And that's what's going to happen. It's math at this point, and that's so. I mean, even though they're performing very well, and they're going to be really close to what the prime rate mortgage lending rate is going to be, it's the values are going to come down, just based on that capitalization rate.
Yeah.
Matching up with the market. Bid, ask, number 4. We see that right now it's wide, right?
Yeah.
I mean, here's what we're asking for the property, and here's where the offers are coming in at. It's a Grand Canyon. You know what I mean? We're talking, there's a big spread right now with what people are offering on properties. Here's what we're asking because of the cap rates catching up to that in the market. It's what we talked about the last item number 3, but in 4 we're saying that it's going to have to come together. The spread will narrow significantly. Sellers become more realistic. They're either going to pull their properties off the market and not sell them, but the ones that are looking to sell, if they've got the value that they feel like they still can, 2023, that's what we're going to see.
Yeah. So even though the people looking to buy, maybe they can't get as much for their money because interest rates are higher, the prices are probably going to come down, is what you're saying.
I think so. Yep.
So
There's
it'll
a
even
reality
itself
that's
out.
happening there. It kind of goes hand in hand with what I'm saying for item number 3,
Yeah.
specifically for the multifamily and industrial where it's been so strong. So I think maybe it's going to be that even more so for office. Retail is looking good for 2023, but we're going to have some type of that Grand Canyon's going to become a little tighter.
Yeah. Yeah.
It's going to come to reality of where the market will trade at, and that's what we're going to see, I think, in the first 6 months of 2023.
Yeah.
Interestingly, which is not a topic or a product type that we track often, but it is a gauge in the market, and we do track it overall. Hotel. The hospitality industry, hotels are the most favored investment going in. He makes a good point that they were decimated so much in the pandemic, right?
Yeah.
I mean, nobody was traveling.
Yeah. No one went to hotels.
They really got slaughtered,
Yeah.
right? And they were already with Airbnb and a lot of other pressures there. 2021, they were hit hard. Many of the hotels were sold in 21 at like 60% on the, 60 cents on the dollar.
Yeah.
And just because there was that type of,
Well, and they probably couldn't
Correction.
make rent either.
yeah. And so I think the reason that the author of this says that it is going to be one of the best performing is the lease rate is for one day, one night.
Yeah.
So they don't have to hedge on where inflation's going to go. They can move it on a daily basis, and they can do
Adjust their
that.
pricing accordingly.
Yep. Number 6, there's going to be some increases in defaults, commercial real estate defaults and foreclosures. Higher interest rates, slowing economy, recession, it's going to cause that increase. He's predicting that. It makes sense.
Yeah.
Like I said, once you realize, you read it, there were a lot of properties over leveraged,
Yep.
right? I mean, they didn't require, lenders were not requiring a 50% cash in, they're getting 20, 25%. They got leveraged up. If they've got any type of a rate that changes or is going to be renewed, they're going to be, facing a negative cash flow from what they were before, for sure.
Yeah.
It's going to trigger some of those things, and I'm guessing that there will be, more vacancy
Yeah.
in some of the office sector and other areas of the market.
So do you think that it'll be better than 2008 with all the defaults and foreclosures, or is it
I
gonna be
don't
about
think
the
it's
same?
going to be that. I think there's a natural thing pushing this one now, where it's, there was were they over leveraged? They were, when you look at it, saying you're coming in with only 25% down
Yeah.
versus maybe 40 or 50% of that. And I think that we're talking about an interest rate hike that, several percentage points that either the loan is going to renew at or maybe even climb. Maybe it's a variable rate on some of these. It's just going to trigger that. So I think it's, we'll see how over leveraged the market's going to be. But I think we're going to see an increase of default and foreclosures. I think it's a good time right now that if you are in a position where you can raise funds for going through the workout process or maybe improving the properties or at least having a little bit more of a fund to handle that change in
Right.
equity.
Well, and do you think that maybe since there's the defaults and foreclosures, that if you're sitting on some cash, maybe go and buy it up?
Could be. Yeah, for sure. I mean, there'll be that opportunity. I think a lot of the developers, at least at the conference we went to with industrial, as that slows down, they're going to take their cash and try to buy those industrial properties that are defaulting. And so I think that will be what will happen across the market. I do. Where's the money going to go? The next item, sunbelt states continue to attract the majority of the commercial real estate capital. People love. I don't know if it's just the sunbelt and the sun, but I mean, obviously Florida, Tennessee, Texas, Nevada, North Carolina, Arizona, Georgia. They've got, even with the increase of all the things happening there, that's increase in rates and everything else, there's just more money chasing it. Those
Yeah.
markets are doing very well right
Yeah.
now. And that's what I see happening. And I think people are going to actually even flock more to those areas.
Yeah.
Maybe get a little more competitive.
Mm-hmm.
And let's see, industrial rents, predictions, that seems a little extreme, more than 10% in a year.
Mm-hmm.
We've had some great increases in that sector, and I just see that overall rates across the country, probably almost in every market, there's going to be some type of a decline.
Yeah.
Maybe not in every single property, but in most markets, we're going to see that 10% haircut of where we're at right now, at least in the first part of the year, and kind of maybe level off. I don't see a trend going down. I think there's a correction for
Yeah.
where rates are going to be, right? Now, those that just signed those leases, as they're going up, you're going to be in a great position. They're going to keep going up, and I don't think people will question that or balk at it much, but that's...
So when you're predicting that rents will decline more than 10%, does that mean that the rental cost is essentially going up that amount? Is that what it means by
Well,
decline?
the actual rents that landlords will be able to achieve. So I think they're
Yeah.
going to come down a
Oh,
little
okay.
bit. They're going to not be able to, because of the overall pressure in the marketplace,
Mhm.
cap rates coming down. I mean, you're going to see not just the values come down, but I think that you're going to have, well, and this is questionable, right?
Yeah.
In markets where it's being built and supply is coming on, that may be the case. One area that I've heard is a lot of the markets are pulling back. The lenders are not feeling as comfortable to
Yeah.
build these spec buildings that maybe were planned.
Mhm.
So across the board, he says 10%. If there's one area of all these 10 variables that are predictions are going to happen in 2023, this one I have a couple. It's so strong right now in Salt Lake, Utah County, and if these projects aren't built that are queued up and ready to go,
Yeah.
banks aren't wanting to finance the construction, the developers are kind of holding off a little bit, we're going to be stuck. It's going to be a bad place for the market because everything's going to get filled up here shortly for
Yeah.
just the current activity. So I can see it coming off a little bit just because when there's hesitation in the market, there's going to be that
Yeah.
pressure from tenants pushing a little bit more on the rate.
Yeah.
But yeah, maybe as much as 10%. Maybe across the country that could be the case.
Mhm.
In some markets, I don't know if that'll happen. Higher lease defaults. We're talking now we're talking mortgages defaults. I think the single-family home market is number 9. People are going to start defaulting. I mean, if the economy is affected,
Yeah.
people with layoffs, rates have been clipping up. I
Mhm.
mean, it's been a great time even on single-family homes that people have been renting out. I own several. It's been great. I've not had anybody push back yet on that,
Yeah.
but I can see, if one of the spouses or family members is laid off or this impacts the job, that it would be tight on them.
Yeah.
They are paying the rates right now,
Mhm.
but they feel a little bit of a strain that they've been not taken advantage of, but that they're stretching
Yeah.
in properties that are nice single family, but not anything to what they're paying now. They feel like they should be getting more.
Yeah.
The property,
Mhm.
maybe in a better area,
Yeah.
which is not the ones I own.
Which,
They're-
I mean, that's kind of where I'm at in the house I rent right now. I mean, we're paying almost $3,000 And in my opinion, $3,000 should get me a lot more than the house I'm in right now.
Yeah.
So, I mean, I can definitely see that happening in the future, like he predicted.
Yeah,
So.
I think so.
Yeah.
I mean, the increase happened, and everybody's paying that right now.
Yeah.
I can see there being lease defaults. What does that mean? Landlord's going to have to work with the tenants,
Yeah.
and there'll be, obviously some eviction, some of that, but I think you're just going to see some softening there.
Yeah.
That is going to happen
Well,
in 2023.
I mean, it kind of goes back to even like the bid ask, how those are going to come together.
Yep.
The landlord and tenant are probably going to have to come together to reach some type of middle ground too.
There's going to be something there.
Yeah.
Tenants will be wanting discounts, and where the rates are at right now, there's going to be some defaulting.
Yeah.
I mean, I think if what they're trying to cool down the economy, raising interest rates, that's what they're doing. It will have an effect on even the single family market,
Yeah.
for sure. People that want to be in a home, they're stretching to be there right now, and at $3,000 a month for a nice little home is
Yeah.
that's a lot. That's a
Yeah.
lot. It's historically, I mean, it might have been $2,000 a year and a half ago.
Yeah, exactly.
That's what type of increase we had, and how tight the market is.
Yeah.
Final item, it was listed here as a prediction. The office investment market, which is historically in the gateway cities in the past have been where there's a tremendous amount of opportunity. If you want to go to a city that that there's lots of opportunity, it's Los Angeles, San Francisco, New York, Chicago, Miami,
Boston.
Yeah, Boston for sure is on that. Seattle, Oakland,
Yeah.
Portland, Atlanta, and I just see that the prediction is that there's going to be less capital chasing into those markets. I think the valuation of office in those markets is it's going to even come down. There's going to be less money trying to even acquire it. I think landlords in those markets have had a great heyday for
Yeah.
a lot of years. It's probably going to pull back a bit. They're going to have that, and they're going to have to offer different incentives to make that happen. Out of that, which leads to the next topic that we were talking about, is the new gateway cities.
Right.
And that is of interest, I think, for, let's see here if I get... Yeah, I mean, it's what's going to change. Where's that at?
Yeah.
I think one of the things pushing that, Blake, is that when people moved out of the office space
Yeah.
and they were working from home, everybody was doing that, there became a trend that, hey, I can work anywhere. I don't have to live. I love the opportunity I've got in New York,
Yeah.
but I don't love the neighborhood I live in, and since I'm actually sitting in my apartment all day,
Yeah.
and I don't have that interaction with people.
You don't have to deal with the traffic, you don't have to, there's a lot of benefits of living in the city, but I think a lot of people are realizing there's more benefits now that you can work from home to move out to a suburban area.
Yeah, what was maybe more of a suburban market, and there's a list of, it's very interesting, the list that is emerging as the new gateway cities are the cities that people moved to or relocated their companies to,
Yeah,
right?
exactly.
Tesla moves from California to Austin, Texas.
Yeah.
A lot of the suppliers that supply Tesla are going to move close to get to Austin, Texas,
Exactly.
right? And top of the list was Austin, Salt Lake City,
It's number 2, yep.
Phoenix, Seattle, San Diego, Sacramento, Tampa. Again, these are cities that have been successful and had growth, but they're now considered gateway cities, cities that there'll be, I don't want to say unlimited opportunity, enough growth, businesses coming there where there's huge opportunity
Yeah.
of growth, and relocation of these businesses is what is driving that. The list continues, Dallas, Denver, Portland, Charlotte, Jacksonville, Atlanta. I think Atlanta was on the list before, maybe.
Yeah.
But the opportunity of that, of maybe not the original gateway cities, but some of the other large city emerging markets as gateway cities for that, as Philadelphia, Houston, Washington, D.C., San Antonio, Raleigh, Durham, North Carolina, Miami, Nashville, Orlando, and Minneapolis, gaining some traction again as another gateway city.
Well, and all of these have gained over 10% year over year in the past year. And I mean, Austin's all the way up at 38%. And then we got Salt Lake City, which is where we are, 26% up year over year.
Yep.
So some huge gains in even just for investment purposes, right? I mean, you can really make some good money in these cities right now.
Yeah, and I can't speak to all of the issues. I think what would be the downside of a gateway city that's maybe not there. I think I always look at things that maybe as these have been identified as potential or new gateway cities, the issue comes up. What some things that maybe would make it. I always am a little leery on some of the coastal cities that have to fight the hurricanes.
Yeah.
But they seem to keep going, or maybe they build the houses differently or better. But there's
Yeah.
maybe some of those cities. I mean, I never would have thought Houston to be impacted by a hurricane.
Yeah.
You know? But I think they've come out okay and well, and they just keep growing and doing well. So those are some of the challenges I see. Natural disasters
Yeah.
that could decimate some of these things. But you know, there's always been that threat of earthquake in Los Angeles.
Even here.
You know, and
Yeah.
you know, Salt Lake City's on a massive fault line. You know, so
Yeah.
all the natural disasters, I think you can't predict, right?
Yeah,
But
exactly.
you could maybe make some decisions based on what you feel better about yourself.
Yeah.
The other thing that I think is will stunt the growth of some of these potential gateway cities is the infrastructure with transportation. You know, the last 10 years, really ever since the Olympics came to Salt Lake City,
Yeah.
there was a renewal of how do we make transportation better. They got a front runner that runs up and down from Salt Lake down to Utah County. Not a bullet train, but it is fast.
Yeah.
And with fewer stops to get people down in the metropolitan areas. New bus routes on major roads that they've added lanes for.
Yeah.
That people that are riding the bus and taking mass transit, it's a better city, and there's a lot of infrastructure that allows it to
Yeah.
go east-west. All those other lines I was talking about, kind of north-south. Of course, because of the mountains on the east and the lakes to the west. But for the most part, there's a lot of infrastructure, alternative belt routes around the city.
Yeah.
All that infrastructure. For Salt Lake and Utah counties, I can see great growth potential that won't be stalled there.
Yeah.
In fact, I just got the latest map on the transportation for Utah County, and it's they are saying somewhere between 2030 and 2040 there's going to be a road that will cross over Utah Lake to
Really?
get to the east and west side, which is going to make that really open up.
Yeah.
And that's, I mean, I've owned some land out on the west side of Utah Lake, and it's beautiful out there.
Yeah, it is.
It's one of the most beautiful views looking back
Oh, I
towards
know.
Timpanogos with Utah Lake sitting there. And,
Yeah.
and I think there's going to be a lot of growth out there.
I think so too. I mean, I think that, especially if that road gets built, you definitely will see more people wanting to live out there because it's not a hassle to get back home when you're traveling to even just pick up groceries. I mean, some of that stuff over there is really spread out, you know?
Yeah.
And so I think that'll definitely open up a lot of housing opportunities out there as well. And I'm curious about this, if you know it. Do you think there will be office space built out there? Kind of like how they're doing in Lehigh right now is a big up and coming place where you see a lot of big companies moving towards. Do you see anything like out in Eagle Mountain or like anywhere on the west side of the lake having these big businesses built?
Well, yeah, I can see that for sure. There's a lot of land out there, and it's identified in some areas. I mean, so there's that large facility, Facebook,
Yeah.
has a huge data center out there. There's another land just next to that was acquired for a third-party data center for some larger companies, and there's not a lot of employees that it requires to be there, but there is a huge infrastructure that's been built, and some high-paid people that will be out there monitoring and seeing that. I think there's going to be some growth out there, really significant. I think that's they have had some challenges with some of the infrastructure.
Yeah.
And water is an issue. I think water is going to continue to be an issue in the West.
Yeah.
There's not enough dams or pipes to handle the growth. People want to live out here. We've had huge growth, and it's exceeded what they had estimated. So that is actually maybe something that could curtail growth in this area to some degree.
Yeah.
Not just in Utah. I mean, it will affect New Mexico, Colorado, Arizona for sure.
Yeah.
Las Vegas, maybe some of those. What do they call them there? The ponds. Where they shoot the water fountains, the Bellagio, and different things like that. I mean, you go down to Las Vegas and you kind of have a feeling that there's no problem with the amount of water that there is, in the West. But it's coming up more and more every year. It's an issue, and so things that maybe we didn't think about that 15 years ago, that water would be a significant retardant of growth potentially for the future, and it has affected. It's an added cost. You can get it, you can buy it from some of these water districts, but it's got to still be in that basin, and so expansion outside some of these areas could be unique, to see, and challenging. Having said that, I think that we're going to be developing differently than we have in the past 50 years. I think we're going to see really smart developments using the water, recycling, better layouts, better design. And we're seeing that, but it's resisted, because it is different. And so overall, our estimate of where the market's going to go, I see good things. There's corrections. There's always got to be corrections. I feel like the corrections we're having now are not like the '08, where things were just, there was a flaw in the system. If there was a flaw, we were talking about natural disasters. I guess we learned a lot in my lifetime. Let's see. So my great-grandfather died along with his brother in the Spanish flu epidemic in 1918. Yeah. That was just something that affected our family. Yeah. And we have somebody that we can point to as this pandemic that hit, one of the worldwide bubonic plague type things that we didn't think, there were shows made about it, and zombie apocalypse and all that type of stuff, right? But at the end of the day, that's another factor. I mean, all of this stuff that's happening is because of COVID, right? Yeah. And they're still having problems in China. I think the problems that are still happening in China are going to spur growth in the United States. If you ask anybody, from what I've been told, anywhere in the world, if they could move to one place, where would that be? It's still the United States. Yeah. That's it. It's the United States. Yeah. And the second city, or the second area, I think, is Germany. And it's like way down on the list, right? Yeah. 2023, the overall predictions, I mean, I'm making long-term projections on that there, obviously. And that we're going to come out of this pandemic, and that we're going to come out of all these other issues with supply chain and things like that. I do believe in America. I think that Americans will solve big problems, and I think that will create growth opportunities. Obviously, how does that affect, in the short run, the next really real estate? When you're guessing out 12 months, I feel like we're just going to have some good, maybe needed corrections.
Yeah.
I think that, with the office sector, one thing that I was not expecting to see, but over the last several years, retail has really lined up to be, they've made a lot of corrections on how they're doing and leasing stores out and putting a combination of tenants together and what's successful. And I'm impressed. They've kind of been able to reinvent themselves, know, and with all the pressure that's going from Amazon and all the other online places you can buy, you can now Gap's smart. They're entering that realm and selling their own products, and there's lots of companies doing that.
Yeah.
I think the more jobs that we can bring back to America, manufacturing, technological, those types of things will ensure our growth.
Yeah.
So
I agree.
that's my prediction for 2023. Thanks for watching. It's been a good show, some good product. We hope that you've enjoyed it. We're excited. Episode 1, we're looking for followers to subscribe, like if you like, and tell others about it. And I would say, if you're looking to join the real estate industry, if you've got your license and you haven't really done anything with it, or you're at a point that you want to make a change or get your license, we would love to have you reach out to us. Find it. We're looking for high ethical, hardworking people, and we can put together and put you on the path to have a successful career in real estate and to give great service to the investors and owners of the market out there.
Yeah.
So until next show, we wish you well and great happiness. Thank you.
Thanks. See you guys.